Welcome to the Mortgage Rate Weekly Market Update for the week of December 18th, 2017. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you your update. Well, last week was a bit of a roller coaster ride for mortgage rates. If you take a look at the bond chart on the screen, you can see on Monday, that big red candle, we started actually pretty good with the bond. The bond was up from last week, but then the bond reverse course, sold off that big red candle down. Mortgage rates moved higher on Monday. Gap down Tuesday, the bond gap down, mortgage rates moved even higher on Tuesday. But then Wednesday, after the Federal Reserve Open Market Committee meeting released their notes saying they were going to raise the Fed funds rate 0.25%, mortgage bonds rallied with that giant green candle. But they were stopped right at the 200-day moving average, a real tough ceiling of resistance. We're not able to break above that on Thursday. They actually sold off but recovered on Thursday. Friday again, hit that ceiling of resistance, sold off, but then able to recover at the end of the day, but closed right below that 200-day moving average. That's been a tough ceiling of resistance. You can see all the way back into October. So with us not breaking above that 3 days in a row, tough ceiling resistance, we're going to recommend locking your mortgage rate to start the week. Take advantage of the rates you got because it can sell off, as you've seen, and move rates higher very quickly. So until we break through that 200-day moving average, our advice is to go ahead and lock in, take advantage of the low rates you already have. Now, if we dig into the economic news, the big news last week was the Federal Reserve Open Market Committee meeting. In that meeting, they did announce they're going to do a rate hike of the Fed funds rate, 0.25%. And that's going to take it from 1.25% to 1.5%. Now, the Fed funds rate affects short-term interest rates like your home equity loans, your credit card interest rates. So those rates will move up as the Fed fund rate move up because it does affect prime rate. But it does not affect directly long-term rates. So long-term mortgage rates can actually get better, as we saw on Wednesday when the Feds announced they're going to raise the short-term interest rate. And the reason why is when you raise the short-term Fed funds rate, that is the enemy of inflation. So inflation going to remain tame is good news for mortgage bonds, which will allow mortgage rates to stay low for a while. So that was great news there. And then a look ahead into 2018. At the meeting, the Feds announced they plan on hiking the Fed funds rate 3 more times in 2018. They also lowered their unemployment prediction rate from 4% to 3.9%. So they're anticipating a good labor market in the new year. And because of that, they are predicting a better GDP in 2018. They're predicting 2.5%. So that was the Federal Open Market Committee, and it had a big effect on the bond market on Wednesday. And then retail sales for November 2017 came out last week, reported by the Commerce Department, and they jumped 0.8%. Almost double the expectations of 0.3%. Now, retail sales year over year from November of 2016 are up 5.8%. Now, in that report, they also revised October retail sales from 0.3 up to 0.5%. So that's great news there. Retail sales, as we move into the holiday season, is doing very well. That is going to predict a very good GDP for the fourth quarter because it looks like the economy is rolling along. Consumers are feeling good. They're spending money holiday shopping. Then we saw the Producer Price Index for November 2017, which is the PPI. That's a measure of wholesale inflation. It did go up from 2.8 to 3.1%, which is a 6-year high for wholesale inflation. Now, the core Producer Price Index, which strips out food and energy costs, it pretty much remains stable at 2.4%. Now, wholesale inflation doesn't always translate into consumer inflation, which even though it's been running hot, it has not affected the consumer inflation. It still remains very low, which has been a problem for the Federal Reserve because they've been predicting inflation is going to move up, hence why they've been doing the Fed rate hikes, but inflation has not moved up. Then we saw weekly initial jobless claims come out on Thursday. Claims dropped 11,000 claims to 225,000 claims for the week. That's 14,000 better than expectations of 239. And this is the lowest reading since October for weekly initial jobless claims. So the labor market is doing very well. That's why the Federal Reserve is predicting the unemployment rate to be 3.9% next year. So we're moving into a great labor market for the new year, which is good news for the economy. Then we saw on housing news, home price appreciation in a report from the Federal Housing Finance Agency released their quarterly home price index for Q3. and it shows you state by state. For 2017, it shows Delaware is up 2.2% year over year. Maryland is 5.8%, so Maryland's doing very good. Pennsylvania is 4.3%, and New Jersey is 3.9%. So based on the report, if you are waiting to buy a home, it'll end up costing you more money as home prices continue to rise across the country. And it looks like everyone's predicting for home loan rates to move up in 2018. So the quicker you can get out there and buy the house, the better deal you're going to get on the house, the better interest rate you're going to get. So long term, your housing costs will be less. And you will pick up the appreciation in the new year the sooner you buy. The other thing is we're moving into the winter months. It's a great time to be a buyer because there's less buyers. When we hit that spring market, it's going to be like last year. We got low inventory, tons of buyers. It's going to be even harder to buy a house if you wait to the spring. So if you are ready, get out there, find a house, get under contract, become a homeowner. All right, in the local news, the next first-time homebuyer seminar is Wednesday, January 10th from 6 to 8 p.m. in Wilmington, Delaware at the Independence Mall. And then the next one in Newark is Saturday, January 20th from 10 a.m. to noon at the Christiana Hilton Hotel. Now, you can register for either one of those events by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.